Welcome back to Tesla Daily News Podcast. It's Tuesday, March 17th, 2026. Today, we're tracking the Tesla headlines that can actually move the stock, a major shift in autopilot packaging, a big new AI chip manufacturing push, and a fresh reminder that safety and regulation can change the narrative fast. Let's jump in. Story 1. Tesla appears to be turning basic autopilot into a paid feature again, and that's a direct revenue lever. Here's the hook. If you bought a new Model 3 or Model Y in North America expecting lane keeping and auto steer included, you may now need a subscription. Context matters. Tesla has been in a multi-year tug-of-war between keeping vehicles price competitive and expanding high-margin software revenue per vehicle. When demand softens or pricing pressure rises, software attachment rates become even more important for investors. Details from today's coverage. Reports say Tesla has removed key basic autopilot functions, specifically lane keeping and auto steer, from newly sold Model 3 and Model Y vehicles in North America. The traffic-aware cruise control feature remains standard, but the steering automation portion is gated. To regain those functions, drivers reportedly need the full self-driving subscription priced at about $99 per month. The same reporting also says Tesla recently indicated it would move away from the one-time purchase option for full self-driving and shift to monthly or yearly subscriptions. Impact for investors. If this holds broadly, it's a meaningful step toward recurring software revenue. Subscriptions are valued differently than one-off purchases because they can be modeled as more durable cash flow, and that can support valuation multiples. The trade-off is customer sentiment and potential friction in the buying journey. Investors should watch for two things. First, whether Tesla sees higher FSD take rate or churn. Second, whether competitors use this as marketing ammo. Takeaway. This is a classic Tesla move. Sacrifice some included features to widen the software funnel. In the near term, it could help margins per vehicle, but it also raises reputational risk if owners feel they're paying more for what used to be standard. Story 2. Elon Musk says Tesla's Terafab AI chip project launches in about a week, and this is about controlling Tesla's bottlenecks. Hook. Tesla is signaling it wants a bigger piece of the chip supply chain, not just designing chips, but pushing toward massive manufacturing capacity. Context. Autonomy, robotics, and AI training are all chip-hungry. Investors have watched the industry learn repeatedly that relying on outside foundries can become a growth ceiling. If Tesla truly believes robotaxi and Optimus scale in 2026 and beyond, then chip supply becomes strategic. Details being reported. Musk posted that Tesla's Terafab project launches in 7 days. Coverage frames Terafab as a gigafactory, but way bigger, aimed at producing Tesla's next-generation AI chips, with the AI5 chip referenced as the target. Partners mentioned include TSMC and Samsung, with Intel discussed as a possible conversation but not confirmed. Another report says Tesla has discussed building domestic capacity spanning logic, memory, and packaging because even best-case supplier output may not meet Tesla's projected needs. Impact on the stock and fundamentals. This is potentially bullish for long-term autonomy and robotics, but it also implies heavy capital expenditure. Investors should think in two buckets. Bucket 1 is upside, improved supply certainty for AI computers used in full self-driving, dojo-style training systems, and Optimus robotics could accelerate product timelines and reduce unit costs over time. Bucket 2 is risk. Chip manufacturing is brutally expensive and execution-heavy. If Tesla takes on too much manufacturing complexity, it can pressure free cash flow and raise story stock skepticism. The market will want clarity. Where is Terafab located, how much capex, what timelines, and whether this is Tesla manufacturing chips itself or simply scaling an ecosystem with partners. Takeaway. Terafab is a strategic signal that Tesla wants to be an AI and robotics platform with control over key hardware inputs, but investors should demand numbers, not just ambition. Story 3. Tesla stock is getting a tailwind from the AI trade, while oil volatility keeps macro pressure on consumer demand. Hook. Tesla is trading like both an automaker and a high-beta AI name, and on days when tech rebounds, Tesla often rides the wave. Context. Markets are digesting ongoing Middle East conflict risks, especially around the Strait of Hormuz, which has whipsawed crude oil prices and inflation expectations. Higher oil can help the EV value proposition, but it can also tighten financial conditions, raise rates, and hit consumer confidence. Details from the market wrap. U.S. equity markets opened and closed higher with tech leading. Tesla traded up around the low single digits in some reports, with one outlet citing Tesla around $400 per share during the session. Oil pulled back from earlier highs, with WTI reported in the mid-90s per barrel range at one point, and that helped risk sentiment. Traders are also looking toward a major central bank week, with the Federal Reserve expected to hold rates steady. Impact. For Tesla investors, this is a reminder that short-term price action is being driven by macro and AI sentiment, not only vehicle deliveries. If rates stay higher for longer, auto affordability pressure remains a headwind. But if Tesla can keep convincing the market it's an AI infrastructure company, autonomy, chips, robots, then the multiple can remain elevated even during cyclical auto weakness. Takeaway: watch Tesla's correlation with megacap tech and the AI complex this week, especially alongside Fed messaging and oil headlines. Story 4. Safety, lawsuits, and regulatory scrutiny remain a real overhang, and a Cybertruck FSD crash story is circulating again. Hook. One high-visibility incident can dominate headlines, and when it's about autonomy, it can quickly become a stock-moving narrative. Context. Tesla's autonomy strategy is central to its long-term valuation. Anything that slows regulatory approval, triggers investigations, or damages consumer trust can hit that thesis. Details from reporting. A lawsuit has been filed by a Cybertruck driver who says the vehicle, with full self-driving engaged, failed to follow a curve and instead accelerated toward a barrier near an overpass-style split, resulting in a crash. The reporting describes injuries and states the driver claims Tesla overstates the capabilities of the system. The incident reportedly occurred in August of 2025, with the case becoming public more recently. Impact. Even if individual cases don't change Tesla's fundamentals, they can add up in 3 ways. First, regulatory scrutiny that delays features. Second, legal costs and potential settlements. Third, reputational drag that affects FSD subscription adoption, which we just discussed is becoming more important to Tesla's profit model. Takeaway. Investors should separate the trading impact of headlines from the longer-term question. Does Tesla demonstrate measurable safety improvement with each autonomy release? And can it prove that to regulators and the public? Story 5. XAI headlines are back in the mix, and it matters because investors often price Musk ecosystem risk and attention into Tesla. Hook. When Musk's other companies generate controversy or major strategic shifts, Tesla can catch the spillover for better or worse. Context. Tesla's brand and leadership premium are intertwined with Elon Musk's broader portfolio. That can boost narrative upside, but it can also amplify headline risk. Details from recent coverage. Reports say Musk's AI company XAI is recruiting finance professionals, bankers, traders, private credit specialists to train Grok for finance workflows. Separately, other reporting says teens are suing XAI alleging the Grok system was used to generate explicit images involving minors. These are XAI stories, not Tesla stories, but they can affect sentiment. Impact. The practical investor lens is distraction risk and reputational spillover. If Musk is pulled into legal and political storms elsewhere, investors may question Tesla focus during pivotal product cycles like robotaxi, Optimus scaling, and manufacturing expansion. Takeaway. Tesla's fundamentals still come from vehicles, energy, and software, but the market often trades the Musk narrative, so keep an eye on cross-company headlines. Before we wrap, here's what I'm watching next. 1. Confirmation and scope of the Autopilot packaging change. Is it truly across all new North American Model 3 and Model Y builds? And does Tesla update pricing or messaging on the order page? 2. Details on Terafab, location, partners, timeline, and capex. 3. Macro. The Fed meeting tone and whether oil volatility returns. That's it for Tesla Daily News Podcast on March 17, 2026. If you found this helpful, subscribe so you don't miss tomorrow's roundup, and follow us for daily Tesla updates focused on what matters for Tesla investors.